Most people think about what they'll earn this quarter. I plan where I'll be 30 years from now. This isn't just a difference in approach. This is the difference between lasting power and temporary success. In 2005, when the real estate bubble was at its peak, everyone was chasing short-term profits. Subprime mortgages were like golden eggs. Competing banks were breaking records every 3 months. Wall Street was printing money wildly. I was doing something different. I was planning the next decade. During those days, sitting at my desk in the office, I asked myself this question: how will this trend look in 2015? The answer was disturbing, because mathematically it was impossible. People were borrowing 10 times their salaries. Banks were giving hundreds of thousands of dollars to customers with no income. The system was completely unsustainable, and nothing unsustainable lasts forever. When I made this observation, I determined my long-term strategy: reduce real estate positions, increase cash, prepare for post-collapse. When I presented this plan at the board meeting, everyone was surprised. "Jamie, the real estate sector is experiencing the best period in history," said our CFO. "Why are we exiting now?" "Because exiting during the best times is the key to entering during the worst times," I said. This is where the power of long-term thinking emerges. You sacrifice today's profits to position for tomorrow's opportunities. Most people want instant gratification. I seek permanent domination. In 2007, when the real estate collapse began, everyone was shocked. How could this happen? Didn't anyone see it coming? I had seen it, because I'd been preparing for 3 years. During that crisis, when rival banks were failing, J.P. Morgan remained standing. Not just standing, it grew. We bought Bear Stearns. We bought Washington Mutual. We emerged from crisis stronger. This wasn't luck. This was the fruit of long-term strategy. So how did I develop long-term thinking? In the mid-90s, when I was a young manager, I learned a painful lesson. I was making short-term investments in the tech sector. The dot-com bubble was at its peak. Everyone was getting rich. I was chasing quick profits. When the bubble burst in 2001, my investments evaporated. From that day on, I made a promise to myself: I would never think short-term again. I began developing long-term perspective. My first rule became evaluate every decision in terms of its consequences 10 years later. My second rule, think outside the time frame the majority focuses on. My third rule, separate temporary trends from permanent changes. These rules seem simple but are difficult to apply because everyone around you creates short-term pressure. In 2010, when Fintech companies began emerging, most bank leaders ignored them. "It's a temporary fad," they said, "not real banking." I thought differently. I tried to imagine where these companies would be in 2030. Eventually, I saw this: technology wouldn't kill banking, it would transform banking, and those who missed the transformation would be buried in history. During that period, we started making fintech investments. Our competitors called it waste of money. I called it future investment. Today, our fintech partnerships are among our bank's fastest-growing segments. Long-term vision proved right again. But the hardest part of long-term thinking is being patient. In 2012, when the European debt crisis was at its peak, I started investing in European banks. Everyone said Europe will end. I said Europe will be reborn. It took 4 years to see the fruit of that investment. 4 long years. Throughout this time, I was constantly criticized. "Why are you burying money in Europe?" they asked. Because long-term strategy requires short-term pain. When we saw results in 2016, our European portfolio had become one of our bank's most profitable divisions. The critics were now calling it a genius move. Not genius, patient. How patient can you be? When everyone says wrong, can you wait 3 years?
Most people can't wait. That's why most people can't build long-term wealth. In 2018, when the crypto crash happened, a similar situation emerged. Bitcoin had dropped from $20,000 to $3,000. They were saying crypto is dead. I was thinking about 2028. I knew digital currency transformation was inevitable. The question wasn't Bitcoin dying, but which crypto technologies would survive. We started making selective crypto investments, a small portion of our total portfolio, but strategically important. Today, the value of those investments, but this is still an unfinished story. The real point is this: long-term thinking also allows me to capture short-term opportunities. When the 2020 pandemic began, everyone was in end-of-the-world mode. Stocks had crashed, the economy had stopped, most companies were struggling to survive. I was thinking in two different time frames, 2021 and 2030. For 2021, the economy will recover, stocks will rise, so I bought. For 2030, the post-pandemic world will be completely different. The trinity of digital banking, remote work, and artificial intelligence will transform the sector. So I increased technology investments. Both strategies worked. In the short term, our stock purchases rose 80%. In the long term, our technology investments allowed us to gain competitive advantage. Long-term thinking means multi-dimensional strategy.
Last year, when the AI boom happened, most companies rushed to make AI investments. There was "don't miss the AI train" panic. I established 3 different timelines, 2024 to 2026, understand which areas AI will truly transform. 2027 to 2030, build AI-based new banking models. 2030 plus, complete AI-native banking system. With this approach, instead of spending money hastily, we're making strategic investments. Our $5 billion AI program was shaped according to this 3-phase plan. Result? While our competitors are still trying to understand what AI is, we'll have already completed our structural transformation. Long-term thinking isn't just investment strategy. It affects everything, from human resources to operations, from technology to customer service. When hiring employees, the question I ask, where will this person be 5 years from now? When making technology investments, the question I ask, will this system still be relevant 10 years from now? In customer relations, the question I ask, will this customer's children work with us too? Every decision is filtered through the lens of the future. But long-term thinking has a cost: constant criticism, misunderstanding, loneliness. Because while everyone around you lives today, you're building tomorrow. This can be psychologically exhausting. For 2 years after the Bear Stearns acquisition in 2008, I was criticized every day. It was too expensive, they said. It was unnecessary. The press criticized me, investors were uncomfortable. But I knew I would be proven right in 3 years. I was proven right. This is the common trait of long-term leaders, being able to withstand short-term criticism. Can you withstand it? When everyone says wrong, can you be patient for 3 years? Most people can't withstand it. That's why most people can't become leaders. Finally, let me say this: long-term thinking is a learnable skill. It's not innate. Every morning I ask myself this question: how will the consequences of the decisions I make today look 10 years from now? This question affects everything, from daily operations to strategic moves. Even when writing an email, I think, how will this tone affect our long-term relationships? This might seem obsessive, but obsession is the key to excellence. So are you ready for long-term thinking? Or do you still prefer to focus on this quarter's results? Because those who focus on this quarter miss the next quarter. Those who focus on the future win throughout all quarters. I prefer to be among the winners.